AI is changing real things. That part is not hype. But a real technology can still create a very expensive story around itself. That is the difference people miss when they argue about an AI bubble. The question is not whether AI works. The question is whether every expectation around AI can possibly come true. The key is to keep the machine and the market story in two separate boxes. Because markets do not price the present. They price a future people can imagine. And right now, that future is enormous. New data centers, new software, new jobs, new profits. Every one of those ideas might be partly true, but partly true is not the same as worth any price. When the picture gets bigger, the gap between possibility and price can get bigger too. That is where a boom becomes fragile. Not because everyone suddenly becomes irrational, but because a good story makes people willing to pay for a better story. And then the price starts validating the story that pushed it up. This is not new. It has happened with railroads, radio, the internet, and now AI. That is why a popular story can feel safer precisely when it deserves more questions. The technology can change the world and still be overpriced in the moment. Those two things are allowed to be true at once. That is the whole video. We are not predicting a crash. We're explaining why this story can keep getting bigger before it gets tested. No one needs to be dishonest for that cycle to become powerful. Start with the obvious part. AI needs real hardware. Chips, power, cooling, land, buildings, and people. That means someone has to spend money before anyone earns the promised returns. This spending is called capital expenditure. It is the economic version of building a restaurant before you know how many customers arrive. The spending is visible today. The payoff is still a promise about tomorrow. Sometimes that restaurant becomes a chain. Sometimes it becomes an empty building with incredible countertops. The spending itself does not tell you which outcome you are getting. It only tells you that the bet is getting bigger. And AI is currently receiving an enormous number of very large bets. Big construction can be evidence of confidence, not evidence that every forecast was correct. Here is why that can feed on itself. More spending makes the AI story feel more real. A more real story pulls in more investors. More investors lift the market price. A higher price makes the story feel safer. Each turn of the loop gives the next turn a little more emotional momentum. Then, companies can raise more money and spend even more. The loop looks like proof, but sometimes it is just a loop. Think of it like applause in a room. Loud applause can mean something is excellent. The fastest growing stories often feel most convincing from inside the room. Or it can mean everyone is reacting to everyone else. Markets are full of that second kind of applause. That does not make every buyer foolish. It makes timing and expectations the hard part. Because expectations are not numbers on a spreadsheet. A prediction becomes fragile when it requires too many future boxes to be checked. They are stories about numbers that haven't happened yet. And the bigger the story gets, the more perfect the future has to be. That is the fragile part, not the technology, the expectations attached to it. Now, add one more layer: concentration. That is why the pressure builds quietly before most people notice it. A lot of people think they own the whole market, but sometimes that basket is leaning hard on a few very large companies. When those companies rise, the index rises with them. When they stumble, a broad portfolio can feel much less broad. This is not automatically bad. The basket can look wide from the outside, while leaning heavily on a few very large ideas. Concentration can be the reward for real success, but it changes the meaning of the word diversified. You can own hundreds of names and still depend on a small group. That matters when one story dominates the whole conversation. AI is that story right now. That is a useful question for any index, not just one connected to AI. The optimistic case is easy to understand. AI could make workers more productive. It could lower some costs. It could create products we cannot fully imagine yet. Those are real possibilities. Possibility is valuable, but it is not the same thing as proven cash flow. But markets are not paying for possibilities alone. They are paying for very large profits very soon for many companies at once. That is a much harder promise. A useful tool does not automatically become a giant business, and a giant business does not automatically justify every market price. The harder the promise, the more room there is for a normal result to disappoint. This is where people start arguing past each other. One person says, AI is real. The other says, these valuations are scary. Both statements can be true. The internet was real. This debate gets clearer the moment you stop treating it like a single yes or no question. The dot-com boom was also real, and a lot of prices still fell when expectations reset. The technology survived. The pricing story changed. That is the distinction worth remembering. A correction would not prove AI was a lie. History shows that adoption and a valuation reset can happen in the same decade. It would mean the future became less perfect than the price required. Corrections usually begin with a small disappointment. A revenue target missed, a project delayed, a cost that stays high. None of those things need to be dramatic on their own. But when expectations are stretched, small misses feel enormous. A small miss matters most when the story had left no room for ordinary friction. The story stops getting bigger. Then investors start asking a different question. Not what could AI do someday, but what did this company earn this quarter? That shift can be fast. The real shift happens when attention moves from a distant vision to a nearby receipt. And it can happen while AI keeps improving. That is why bubbles are so confusing in real time. The facts look good, the price looks fragile. People want one answer, but markets often give you two answers at once. That combination is uncomfortable because it refuses to give us one clean headline. This is why no one can tell you the exact day a boom ends. The more certain someone sounds, the more careful you should be. The honest answer is usually less satisfying. We can explain the pressure, we cannot schedule the release valve. Good analysis explains the setup. It does not pretend to own the calendar. So, what should a normal person take from all of this? First, separate the technology from the ticker. You can believe AI changes the world without believing every price is sensible. Second, notice concentration before you call something diversified. A broad label can hide a narrow dependency. The goal is not to become cynical, but to make the two questions visible. Third, do not confuse a great company with a guaranteed investment outcome. Quality and price are related, but they are not the same question. Fourth, be suspicious of stories that need every future quarter to be perfect. Real businesses have delays, costs, competition, and surprises. A durable story can survive those things. A mature view leaves room for progress, competition, delays, and imperfect quarters. A fragile price may not. That is not pessimism. It is just keeping the questions separate. The AI boom may continue for a long time. It may produce tools that genuinely change how we work. It may also create expectations that outrun what businesses can deliver. That is how you can be curious about the technology without surrendering your judgment. Both possibilities fit inside the same reality. The useful question is not, is AI fake? It is, what has to happen for today's price to make sense? That question is slower, less exciting, and usually more honest. The boom can be real. The bubble can be real. Your job is to know the difference. Keep the blue machine and the red balloon in view at the same time. That distinction matters more than any headline.